So I will go over SBET and NVIDIA. Okay, let's do NVIDIA. There we go. Here is your weekly time frame. All right. So we flipped bearish on the MACD on here. So let me grab that line. So I'm doing the weekly time frame. So right here, we flipped bearish. Can I change the color? Thank you. All right. So clearly we had this broken out. This is going to the downside. This was curling down, and we finally got confirmation with this one going down. Okay. So you could have trimmed. We weren't in like huge sell zones, but we are in some like mid trim zones. So you could definitely take some wins on the weekly time frame. Now, if you take a look at the daily time frame, probably going to be, there you go. Where's our daily flip? Yep. So we were red. Boom, boom, boom. Right there. So could take some trims on confirmation. You can take trims on the label if you want to. But with confirmation, here we are, broke down and breaking down. You can see the curve starting. So we did start entering a certain buy zone here. We didn't get the full reset. If you can see here, the white line did not get under our green. And it doesn't happen often for NVIDIA. If you take a look, right? This was the April. We didn't get back under. We got really close to the green. So NVIDIA might be one where, you know, you're getting in on the very close to the green mark. Yep. When's the last time? September of 2022 was the last time it actually got under the green. And eventually it will give you that opportunity again. But you have to be a little bit more patient with it. But with NVIDIA, again, you know the company. Well, they are a very good company, well managed, obviously, performing, one of the most valued companies in the world. So it's understandable that this might not always reset because everyone is buying, but that's only really NVIDIA, because I think if you look at like a Microsoft, yeah, we'll get a reset on Microsoft. It's just NVIDIA, dude, AI and chips and, you know, all that bullishness happening. So that's the only reason on NVIDIA that doesn't exactly get to the green bar. But overall, weekly time frame is bearish, but we have already kind of made that move to the downside here. Momentum's already gotten there, so you're about to get kind of like a relief bounce, it looks like. And we're going to see if it rejects this moving average momentum to continue to the downside, or if it's going to actually break through like it did. So you can see it fell, touched, came up, rejects, came back down. Okay. Same thing. This one actually went up, didn't ever get there. It got to the midpoint bar and then went carried on. So use this as like a moving average, is like the support and resistance for this. If it breaks through, awesome. If it doesn't, look for the rejection further down to the downside. ONDS, 6% drop. Unfortunately, it's ran so much, 6%. I mean, it might just go green today. That's what ONDS is like. Okay. Just remember, purple candle, sell it all. Don't ask questions. Okay. But do what you want. But purple candle, sell all. And I will do Uber next. You have NVIDIA calls expiring February 2026. I need kind of more info, like strike price and premium. Are you up on the position, down on the position? All right, we got Uber. Yeah, I mean, ONDS, 874. Honestly, if this could break, and this is a weekly time frame, so you need to wait for it to actually close on the week to know exactly where you're going. That's the only thing. That's why I kind of do more on the daily. I look at the weekly for understanding where the momentum overall longer term is going, but I use the daily to actually trade just because you get better entries. I don't want to wait 7 days. Obviously, in 7 days, this stock can run from it was $7.70 and then it went all the way nearly to $10. That's a big chunk of money you missed out on. That's pretty much an entire move. So I use the weekly for understanding the bigger picture, but I don't usually use it to trade. Didn't want to put that marker there. So if this is the top for ONDS, yesterday was the top. Look for a pullback to these levels. You're going to get an 8. There's obviously some good support here for 3 days on 739. And then I don't see too much on the golden Fibonacci, but the next one would be $6. So there's kind of your pullback levels if yesterday's top is in. Okay, so just keep an eye on that. But we have momentum shifting down. We'll see if the moving average can hold. If it can't hold, look for a continuation to the downside. Daily MACD losing momentum as well. So it could be flipping red maybe tomorrow. We're going to see obviously what the meeting holds today. But it looks like an opportunity could be presenting itself for ONDS after a very strong rally. All right, let's pull up Uber. Sorry, down on Nvidia. Going to dollar cost average, strike 200. Okay, let me circle back to that. Let me do Uber. Alrighty, what do we got? We got a nice little curling to the downside happening. We had the breakout, so the ad would have been very nice. You would have somewhere in there or even that big green day. Change that color. Did we have confirmation yet? No. So where do we get confirmation? Broke through. So you could have got in that day, but all 3 dots lead to this day. So you're somewhere in at 86, kind of where it is right now, with a big move to 93 really quick shortly after. It looks like it's coming down to test this moving average right here. We still have up. We are losing some momentum on this MACD. I mean, a lot of it obviously has to deal with what happens today. Big picture, though, for Uber. Let's take a look at big picture. Okay, we reset here. So we still, I mean, this is weekly time frame. You got the MACD curling down, but you can see the histogram is actually going up. We could be seeing on the bigger picture the reversal of trend reversal. But obviously it's weekly time frame, so it's going to take a little bit longer than maybe what you're anticipating. Overall, I do think Uber is a bullish company with the autonomy there and how they can maybe implement it into our infrastructure of ride sharing. Obviously, you have the Tesla competition now, but Uber and Waymo. So overall, but I do think if you started a position here on the most recent move, and you're probably, did you just get in it or you've been in it, Yenny? I'll look at your Nvidia again. 200. Yeah, so I mean, Bain Capital, him and I talk a lot. We've been in the car business for a very long time. I don't know the exact years, but probably double what I've been in, if not triple. And Rivian, if you're just trading it as a stock, awesome. I don't believe in true electric vehicles at all. And the only one I would do would be Tesla. And the only reason I'd do Tesla is because it's an energy company more than it is really a car company. So for your 200 one, like I said, you're going to probably get this weekly relief bounce. It might reject this, but when it does come up to this, hopefully you are at a position where it is either a small gain or a break-even point. So on a nice little rally here. So we're going to see what this momentum brings you. But definitely I wouldn't get out at this point, after it's already kind of pulled back and we got weekly momentum pointing up. Just you're looking for a rejection in a week or two, which would put you right at the new year. We got Zeta going green. Been in it, cost 60, thinking of adding. You can add, you can do a, let's see, where's our bands on this one? You could do a cash secured put. We can go over that if you have access to cash secured puts. So let's take a look. Let me put this out to split screen. So bottom of our band for Uber, 82. So what we're going to do, come over here, trade Uber options, sell, put. Up to you on days, but typically we want to go out between 45 and 30. January 16th tends to have the most volume right now. And what we're going to do, go to a 30 delta, 82.50, okay? Which puts you right where that band was, right? The band 82.80. You can see that if you see the price on the right side of that column is 86.75 in yellow. Right below it is a white 82.80, which is the bottom white line of that Bollinger Band. So that is the bottom in which the band is showing that it should get to over the past 30 days based on the 30-day moving average and a standard 2 deviation difference. So that is where I would put that right at your 30 delta. And let's go ahead and plug that in. So Uber, current stock price is going to be that 86.63. We're looking to buy it for 82.50. Your premium is going to be $1.84. I'll just round it to $1.85. And that is going to be January 16th, 2026. All right, there you go. So you would be buying, if you were to get assigned the shares, you'd be buying it at another negative 4, almost 5% drop from the current price it is right now. If you were to not get assigned, you would go ahead and make your $185 in premium for one contract. That would be making $5 a day for 37 days. That is going to be, on premium alone, would be a 2.24% return. And you would actually, if you were to get the shares, 82, or as long as it's under 82.50 on January 16th, you would actually own the shares for 80.65 because your premium being subtracted off of your strike price. So you could go that way. That way you can protect yourself to the downside for buying it for even cheaper than just buying it straight and buying it today. So that would be the play if you want to go cash secured puts rather than just buying it right now and trying to figure out whether or not you want to just add. This is a way that you'll feel a lot more comfortable adding, knowing that it would be 82.50. If it doesn't get there, you still made some money on your capital. Okay. But a contract is 100 shares, so if you don't have the capital for that, then I understand. You would just go ahead and buy the shares. All right, Rocket Lab, SoFi weren't able to get in. Chart looks like a lot like Hood. Found the group, Rivian breaking out, found this group, buy a signal for the signal. All right. So let me pull up, let me read these real quick. I'll pull up Rivian. I know it's been on our watch, but I mean, here's your little, this is our buy right here. Boom. 1331. Okay. Yep. It's even better. I mean, and again, we've tested a lot of times, and as long as you are like the company long term and everything like that, the buy signals are always tend to be a great buy opportunity. So I truly believe in this. When it's a company I believe in and I get that signal, I will be adding or buying. So just stick to it, because especially when it's a company you believe in long term, then it doesn't matter. You know you bought at a great point. Especially if it's a weekly time frame, that's a great point. But those opportunities are very few in between. So Rocket Lab, going green. Let's go. Okay, ASTS, you need to get your stuff together, please. We need to be back in the hundreds. 150 is the minimum goal. All right. What else you guys got? What other questions? What other tickers? This is all being recorded, so later if you guys need to refer back to any of the stocks we talk about or just looking at charts, strategy, it's all going to be on the live stream on YouTube, which stays recorded and stays posted. If you don't know how that is, and I might switch that fully to just being YouTube live stream, but if you go to our Discord and go to our YouTube right here, this is, even though it says post a video, it says it's Stock Talk Live. This will be the live stream, which is going on right now. Okay. Instead of doing it in the WAP, I wasn't a fan of using WAP. I like it because of having like storefront and all that, but I don't like it for flipping back and forth for community to talk in. I just want it to be all Discord and leave the WAP as a learning hub, basically. ASST's right there, guys. It might reject and continue just this consolidation phase, but we're getting there. It's getting there. We have this a little bit. That's why I think it's going to like reject. I see this a little bit, or this is going to reject. One of these two are going to reject the moving average. HIMS. Oh, was here. Cover call and SBET. Yeah. I actually had a, and I'm going to go through that during this live stream so it gets answered and she can look back at this. But I had questions about SBET position and all of it that we hold and how that we're managing it. And I'm going to go over all that. HIMS. Okay, if you've known me for any amount of time, you will know I'm super bullish on HIMS as it is my largest holding. And we have our confirmation, and this would be the day that we did buy, and we did add to our shares. Somewhere in this 33, 34, 35 day. Confirmation, good to go. Okay. If we take a look at all the times that it has told us to add and buy on this stock, we are doing very well. Between going to $3 to $11, anywhere in the $7 to $13, $14. Didn't tell us to do it here, but you're back in the 11s, back in the 23s, back add in the 15s. Another trim at 32. You did get a little bit of a green light here at 24. Obviously, we went up, add, trim, no signal, but you did get another, like, could buy, could trim, add, nothing but buy. Last time we got a buy was all the way in August of 2023. So that is a strong sign that this is an opportunity that has not presented itself even during the April crash at 26, 24. We did not even get the buy label. Okay, we got an add label, which was awesome, which we did, but this I wish would have popped here, would have leaned in a little bit more, but this popping up now is pretty crazy to me. So, all right. Yeah, the question came up on SBET and how I'm managing that position. Okay, so I'll pop open the spread to you and take a look here. And the question, I'm gonna just read it. Let's see here. SBET 15. Yep. I'm sorry, I'm just reading the message again. She wants to see the worksheet. Okay. So yeah, with this, she's basically, we've entered right for SBET a bear moment, and just if we hit a bear market, what does that look like? Well, I'm a huge fan of not setting a strike above or below what I currently own the stock for, just because I at least want to break even on there and then collect all the premium. So what I did was I just went further out. So on November 11th, we set out for December 19th. So we did, a 38-day cash or covered call. We did just minimum of 40 cents, whatever that was, to get to my strike price, 40 cents. So I collect an extra $1,000 while I wait. So currently, yes, we are down. Current stock valuation being down, we are down 18,000 on it. But because of the wheel profit that we have collected over time between the cash secured puts and the covered calls, we're actually down 10,000. So about, what is that, $7,500 difference, right? Because of the wheel profit. Is the difference. So our original cost basis between all of it's 1962 between just all the accounts. The adjusted cost basis, so for me to break even and just like not keep any of the wheel profit, because the wheel profit helped me get out of the stock, I would actually just need to sell the stock for 1634, which is definitely possible. But when you're just bullish on something like Ethereum or Bitcoin, you're here for the long term, because you're not going to get into SBET or ASST or anything. You're not going to get in the day before this happens. The only way to be part of this run is to be in it during this entire time of it happening. Okay. Did you get lucky if you did buy close to this explosion? Absolutely. Okay. But the majority are not going to do that, not going to time it. And the only way to be a part of this is to just be in it, sit in it. And I don't care if I bought at 20, I don't care if I bought at 14, because this has proven that it can go from 4 to 124. This can drop back down to 10. 10 can go right back to 40. And we're right here again. We're right at this 11. So quickly, it can easily move back up to 40. All we need is Ethereum to do its thing, and that's the case. But all I do to manage my position, besides rolling cash secured puts and lowering my cost average, because that's what I did initially. Oh, I don't know where my stuff just went. There it is. If you take a look here, I rolled. So initially, I was going to buy this for whatever that is, 1660. And then instead, I rolled it. Instead of it expiring on 10/17, I rolled it to 11/07. And then the total premium I collected was 534. So I bought it for actually 1466 instead of 14 or 1660. So $2 basically difference for what I owned it for giving up a little bit more time as we were getting further and further away from 20. So I gave myself more time to buy the shares, but by giving up my time, they gave me more premium to lower my cost average. Okay. So that's how you manage a cash secured put. If you're bullish on the company, again, only get into it if you actually want to own the shares and you want to be a part of it. ASST is a little different because it's so cheap, the premiums aren't there. We did do in Bain Capitals in my account. We did do a cash secured put on ASST for $1. $1 for 10 cents. Basically, it's a 10% return if it didn't stay under $1, which we were fine making a 10% return. And then if it did get under $1, we'd get to own it for 90 cents, which is the case now. We owned it for 89.5 or something like that. But you can't really do covered calls on it, because if I take a look for you guys here, I'll just go to the account and show you. So yeah, we did the $1 cash secured put. And you can see, so it gave us the shares at 89.05 because it was under $1 last Friday, right? It was at like 90 cents, pretty much what we could have bought it for. But again, I'm not trying to time it. It just happened to land right there. But if I wanted to do a covered call, obviously today's not the day because it is a red day. I'd have to do it for $1. Oh, that's not far enough out. But you can go here. I can make 13 cents, so it'd be another 10% that we could do. The thing is, with these kind of companies, you don't know what day in that next 30 days this is going to happen. So I'm not a huge fan of doing covered calls on SBET or ASST, but I do like using cash secured puts as a way to get into them, just to protect yourself to the downside and the volatility that they provide to the market. So, but because it's just it's a penny stock essentially, it isn't isn't really the best for covered calls. SBET's different, and because it's a $17 stock or $124 stock, the volatility is there, that the premiums are juicy. You can set strikes further out, but when it's a dollar, you really have a hard time because they do them in 50-cent increments, and 50 cents on a dollar stock is a big move, right? So, of course, Miguel, just if you want to check back at the, you can go back to YouTube. It'll be all recorded if there's anything else. All right, let's take a look what we got going on. Again, a lot's going to be choppiness. We got HIMS. Okay, I don't know what's going on for. I mean, HIMS is going to give us another opportunity if you didn't get a chance to get into it. I mean, if you don't have HIMS, and I hate putting out what we think the stock is going to go to, but really next year is ridiculous amount of potential for the company's growth side, and getting the stock to 200, 150. So there you go. Dang. There we go. Come on. Do it. $100 covered call, January 16th, 2026. $4 premium. This is what's crazy about the ASTS. So when you get these companies that you bought for cheap and then they ran to this price, the premiums are just crazy. So basically what he's looking at, if you take a look, I don't know why I didn't want to type, but we own ASTS, okay? And we're bullish on the company, yet they're handing us kind of free money essentially. For this stock to be back over 100 it's got a lot to still move. January 16th, yep. So what can we do? We can go to $100. So the stock would still need to move $25 more. And if it does, we'll sell it for 100 and we keep the $3 or if maybe $4, just depends on the bid ask. So somewhere in the high threes, but you'd be selling the stock for 103 and change. So you basically need the stock to move, or if it doesn't move, you're still going to make $4 a share on your capital. That's just sitting there in your account waiting to go to whatever your target may be. That's a 26 delta. If you want to keep your shares and not collect as much premium, you can do that. You can go to a 115 and still collect $2 a share. Hasn't even been to 115 yet. Okay. Or you can go even safer, right? You can keep going. Look, you got a 150 way up here, and you can still make 68 cents. If you plan on holding this company no matter what for the next 37 days, doesn't matter where the price goes, if it gets to 102, 110, 115, you don't care, you're not wanting to sell it at that point, then yeah, you could just set it at the 150 and collect 70 cents a share for time that you're going to have anyway. Right? So that's the nice part about doing covered calls, especially if you have companies that have some volatility to them, right? Because we have implied volatility over 100%. The minimum implied volatility that we do is 50%. Yep, the meeting. So there's always money to be made. Doesn't need to be close to the strike. It can be further from the strike, just making less. But just know you're kind of locked in for 37 days for whatever happens. For the most part, you can close the position, obviously, and make the adjustments. The money you potentially lose on a cash secured put, obviously is way less money than if you just bought the stock and the stock went down. For example, I don't know if our PGY is down. No, it's currently up. But I do believe when we bought, it was down just for like a day, and then if we just bought that stock that day and the stock went down the next day, we would have been down $800. But because it was a cash secured put and the stock went down, we were down $200. And we can just take that loss. If all of a sudden your thesis changed, yeah, I took a $200 loss, but if I bought the stock that day and it went down, I would have taken an $800 loss. So taking your losses is very minimal when it comes to cash secured puts and covered calls. It's a safer hedge than just playing the opposite end, because if let's just say for you're bearish and you wanted to do a covered call and just collect some premium in the meantime, right? The stock goes up and it goes the opposite way. Okay, you can still close your covered call and you're going to have to take a slight loss on it. Or if you did the other way where you actually placed a put, right? You placed a put, like you were betting the stock is going to go down. You bought a put and the stock went up. You were going to lose probably double what you would have lost if you just did a covered call. So there are safer hedges against the market that benefit you the same way. You don't make as much, but you are also not going to lose as much when you are wrong. Okay. I got questioned also last night if you can use this strategy that we do here for our buy signals the same way you would do it for a put. And this quick answer is yes, that is possible. I have not worked the specifics as far as the true signals for that. Obviously, you would think it'd be the opposite, right, of this. When this happens, this crosses and this crosses down, but that's not always the case. I don't know which one to even show that might have it because I haven't done enough back testing on it. But you can see this guy and then, yeah, cross, okay. This came over and crossed. Yep. So, I mean, that might be the truth that it is the opposite of it, but I need to figure out where this red line needs to be more confident in it. I just put the red line as of right now to be equivalent to the green line, so it just keeps it, you know, aesthetically pleasing and make that line in the middle and everything. But I will look for the strategy to the opposite side, so that way we can play both ends, and that way when we see a trim and we get the signal of confirmation that we are going to the downside, for example here, right? Here or here, one of these 2 days. I'll go the worst case scenario that we got into it late. Okay. Cross to the downside, cross to the red side, confirmation on the MACD to the downside. Yeah, you could have played it short the whole way. Once you started getting into an ad zone though, and this has bottomed out, if the second this touches the green line is when I would definitely get out of a put of any sort. I would not want to be in your put during the time it is coming close to that reset. So that's what we got to figure out. I'm going to figure it out. And we'll get an opportunity to play both sides and be pretty much ready to roll with whatever the market's going to give us. All right. Any other questions? Any other stocks you guys want me to look at? The market is trying to figure out what it wants to be today as we approach the first hour. I don't do a lot of trading in the first hour of market open, just so you guys know. And you guys will see my trade, again, because the community's free, my alerts go out, my trades, for you guys just to see what I am doing. But my trades aren't frequent, okay? So don't be thinking I'm not a day trader. I'm not trading for the day. But I'm heavily in our positions that we took last week. And this week, now I'm waiting for the play out of what's happening. So that's why I like to do these lives, is to kind of talk about what I'm seeing, what I would do. And just because I'm not doing it isn't because it's not a good move. It's just because I am actually trying to cut down the amount of stocks I hold. I hold too many, I believe, even though I believe all these companies, but I would like to consolidate down to fewer of them, and just go heavier into the ones I'm more bullish on. There's SoFi flicking green today. We like it. Come on. That's what we want. As much as I want SoFi to go down so I can buy more, I also just really don't want it to go down. I think we all understand that feeling. HIMS. Yep, we got another covered call position. So we did HIMS, the $50 covered call. Let's see here. Let me go to the wheel on it. So obviously everything's going to be dependent on your portfolio size and everything like that. But HIMS is another great one, just like ASTS is, that the premiums are just so juicy because the volatility in the company is just so great. And you can pretty much, I think for HIMS, I think for the new year, I think you can get close to like 80, maybe 90, and still collected some premium. So here on James's, he collected 53 cents a share to set it for $50 strike price, which is above the top of this Bollinger Band. Okay. So it would have to break through this Bollinger Band, which it will meet resistance a couple times before it could even do that and go ahead and get to 50. Okay. And that is for, I believe, December 19th. Yeah, so by next week, by next Friday, he would need this stock to move $12 a share. Can that happen? Absolutely, it could happen. HIMS has the capability of doing that, but we also know that we have some resistance here. If we take a look, I don't know if it's on this, is it? Yeah. We have the 200-day moving average is at 46. The 50-day moving average is at 45. So you have those two resistance that you need to beat. So you're going to face basically between 45 and 46. You have a lot of resistance at the moving average that it's going to try to fight. And even if it breaks it at 45, it'll probably touch 50 and it'll reject to retest that breakout to those moving averages. Okay, so it'll go to 50, it'll reject, it'll come back down to those moving averages back to 45, it'll then look for support there, and then we'll go higher. Usually all of that will not happen within a week or 9 days because you have the weekend carryover, so really it's going to be 7 days left in that whole thing. But that is one way that you can continue to make money while you're sitting on a stock that you believe in long term, is just to set those high covered calls. Ryan, I know you sent a few in there, and I can go over that. Can you just type if you have capability, can you type the tickers in? I'm going to go back through messages and find it real quick too, if you can't type them. Let's see here. Ryan, okay, I found it wasn't that far. All right, so this is what I was looking at last night with Ryan's in the chat here. So if we take a look at this bigger move picture, okay, you grab the bottom, as you can see my dotted line across to the bottom here. So grab the bottom point, which is right here, all the way to this top point, which is right here. Here's your pullback zones, okay? Because we've already hit these sells and trims zones, and we never got a reset, right? The reset was down here in this buy zone. This is where your downfall is looking like, as far as where a big pullback is coming to. And this is what I'm waiting for. I'd be waiting for this golden Fibonacci zone to happen, this 243. Obviously, if it keeps going, it's gold, right? So, yeah, I'm not comfortable buying up here. I would want it to pull back. I mean, even if we got into an ad zone maybe, and we got down here to show more true support was found. Obviously, we had this big red day, came down, touched here, but now we've hit this high. I still believe we need to see a bigger pullback for that to happen, for me to feel comfortable in that one. And then REAX. REAX. All right, so we got a big downtrend, right? Overall, big downtrend that we need to break. Grab this top. Boom. So you're looking for that downtrend to break. And the reason, so when you see this, so this is why trends are important. I'm going to remove this for you guys. Following trends is very important. You can see that this was a nice uptrend here. Okay. Red or green. Okay. Here is your uptrend. Once you break that uptrend, I'm not following these signals. Okay. Not following them. Why? Because overall we are in a downtrend. I do not trade against trends. Okay. I'm not a fan of them. I've done them in the past. I get burned every time. I would want to wait. Even though I would pay more money, it would be confirmation that the downtrend is now stopped and we're heading back into an uptrend. If you're trying to time the bottom, that's a whole nother story. Then I would follow these and follow confirmations to get that. But overall, I'm not fighting a downtrend. That would just, you're in a bull market and you keep placing puts. Like, doesn't make sense. There's moments for them, but this would be, if you're doing it, these would be swings. But overall, long term, I'm waiting for the breakout to happen for me to get back into something like this. Okay. With this big move too, if you take a look at where, I'll just even grab this bottom where we are looking. Okay, we did come pretty dang close to that golden Fibonacci level. So just look for that. But again, I'm looking for a good support or a bounce out of the downtrend on that one. And then I think you sent two more. And two more. I think I sent, yeah. PDFS. Yeah. Overall, what has this company even been doing? Downtrend. Yeah, same thing. I mean, overall, right, uptrend. Draw some trend lines. I mean, this would be your most recent trend line. Right, this is overall going up, 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 up. We take a new trend line because it's obviously hyperscaling. You could drew one trend line this way, but once you hit this new trend line, that's what you'd follow. You got your trim signals, boom, and now you are in that downtrend again. Boom, boom, there you go. Boom, boom. But I'm not looking to do and buy here today as we are entering a sell zone. So what's most likely going to happen is we're going to enter a buy zone on, well, this might continue up, but what we're going to wait for is a nice retest of this trend line. It tried to break out and it didn't follow it, so now we got to wait for another one. Okay, so let's zoom in here. We are at the top of momentum. Okay, top. So we want to wait for it to come back down and let's get a reset here. Okay, so that's what I'm looking at on that one. The other one is ATRO, and that's the last one I think you had. ATRO. Okay, and this is what I said. I wasn't willing to buy this one. As you can see, it's had a tremendous run, and I would just want to wait for another crazy opportunity. There's just so many stocks out there that are just better opportunities. This one could, it can still run. Like, there's still room. We're not at a purple candle, sell all, right? There's still potential to the upside. But I'm not looking until we kind of see a nice 30 on it. Every time we think a stock can't get back to where it was, it's not true. It happens. When ASTS was just at 100, it dropped right back to 50 within 30 days. It ran up from 50 to 100 in 30 days and back down from 100 to back to 50 in 30 days. Like, stocks will come back, give it time. But yeah, this is why this one was one that I wasn't, even though the uptrend is there, that's awesome. Now you need to wait. So put it on your watch list, wait for a true opportunity of a buy or add zone to come into play and confirmation of trend here, because this is where we wanted to get in. Boom. Right? White line under, we break through, and then you could follow your trims or however you wanted to manage your position from there. Any other ones, guys? Oscar, they're trying to get everybody out of this thing. I'm going to come down for a reset on that one. Sure enough, came up, rejected. As you guys can see, came up, it's rejecting here. The weekly, though, this is what I want to see on the weekly. That means the bigger picture. We're getting a bigger move coming in. So this is why I look at both, right? Oscar, yes, daily time frame, bearish. Obviously, we're still in this buy zone area, and we're getting an ad yellow flick here, so it might even turn into an ad today. But this is why I look at both. Is yes, short term a little bit bearish, right? Big picture, we're seeing positivity, like going to the upside, trending again. This rejecting, right? That's fine. Bring this down a little bit more. This is starting to curl. So overall, I see big picture more to the upside. Just going to be a slight pullback. Obviously, we've had a tremendous run from the 1250 low to the 1850 high, like $6, right? You got to expect we're going to have some sort of pullback. Every big move comes with a little bit of pullbacks. Big move, pullback, big move, pullback, big move, pullback, big move, right? It's just going to keep happening. So nothing's changed. Overall, though, bullish for the short term as long as ACAs can get pushed through. Hims taking a beat down today, which is kind of crazy. Did anything come out on X about Hims? I thought they were saying they were expanding weight loss into the UK. I think that's what the headline said. Kind of crazy. Let's see. Is TradingView going to tell me? Oh, more institutions. Okay, this is the thing. Yeah, they are expanding nonstop. They have the amazing management team. They have tons of cash. I don't know why anybody would want to be against them, but here you guys go. This is what you guys need. If you guys don't have fintel.io, okay, this is a very important site. Okay, and I will post charts and everything from here into the Discord. But if you ever need to look up, this is the website here. Let's go to HIMS. Let's go to institutional ownership. You can also go to short interest if you want. There's short interest also. I'll just show you. You can see what the short interest is, and shares shorts available and everything like that. Here's your short interest, 32% short. This thing could squeeze like no other at any moment. Institutional ownership. Let's go to it. Who gave us the bad rating? Barclays. Whatever. All right. Yeah, I'm super bearish while all these big money institutions are pouring in. Like, why all these companies? Bank of America is the biggest joke. I can't stand them. I can't stand. I don't know how many times they've done it, but every time earnings comes out or a positive announcement for HIMS, they just go ahead and hit the refresh button and just say put overweight, sell rating, 32 strike price. Every time for the past year, it doesn't matter. They put the same numbers. They were given an opportunity on this last drop to get out of their puts of whatever sort, but they're going to take an L on those puts. So I hate Bank of America. All right, that's my rant. But yeah, I mean, take a look at what we got here. Okay, they're just hedging their bet. They placed a put and they bought shares. Okay. Where we got some big money coming in, though. We got some 9 million from Goldman Sachs, 9 million shares. Okay, I don't think they're pretty done with their money. T. Roy, another 3 million shares. Taroso Investments, they got some 173,000 calls, 2.7 million puts, 2.8 million shares. I mean, there's betting all around. I mean, the stock is meant to be better all the way around, that's for sure, but I would not be only in puts in this company. I don't know if Bank of America has anything. I will find that out. But yeah, Bank of America is a clown show. Can't stand them. I mean, this is where you can see all these transactions though. Invesco, 4 million. Again, these guys, just so you know, they don't put their money into losing stocks. They do, but they don't go lean into these companies. I know they have tons of money and everything like that, and their 4 million is like us buying 1,000, right? But overall, Place the cover call just now on ABCL. Let's see if it fills. $4, $4.35. Yeah, so I should go over the ABCL chart and what I'm seeing. So here you go. The bottom is in right here. This is still holding this trend line. This is a bear case. If it does fall from there, we're going to get down here in the mid twos, high twos. But we have this downtrend of this momentum here, and we broke to the upside, right? We got a MACD flick green. This is trending up. So everything's showing me up, up, up. Okay. And then if we go to ABCL here, let's just see what that big picture looks like. Momentum is here. That is from the daily time frame, not the weekly time frame. This is coming to the bottom. This is starting to curl. I know you can't see it, but the histogram is slowly going down. So I think we're here on this trend line. I think that long term, given come January, is what this wedge is kind of showing. It looks like to the upside. Again, targets of somewhere in the teens, sometime within, I'd say, next 6 to 12 months. So I think this is a great play. I think between them and Hims, I mean, it'd be insane if there's a partnership somehow found in that team right there. But man, Hims. So I think ABCL is a great play. $4. I think you got some resistance trend line somewhere in the mid fours. Yeah, would be a resistance point, which is where you would get that fill in anyway. So that'd be just like trying to sell it up here towards the top of this wedge. So great play. All right. Man, yeah, we're just gonna chop, take a little bit of loss, start rallying into the meeting, and then the market's gonna move like crazy depending on what that man says. Which I think he works for Bank of America. I think he's on the. That's a joke. That's not honest. But I think he's on the payroll. Let's see. I mean, these companies, they've ran, okay? And yes, there's tons of upside potential. I did my Fibonacci's targets, load in here, go to here, go to here, go to here, okay? So this is your kind of loading range. This is the high of the load range. Honestly, this is why I'm still waiting for this range to truly buy. And if I miss it, I miss it. It's, again, there are so many stocks out there, guys, that you don't need to overpay for something. Okay? And definitely when you take a look at the indicator and you see, oh, we're in a sell zone, you definitely should not be thinking I should buy. Okay? Give yourself some time. Wait it out. It'll come back. Okay? Same thing, Fubo. It's trying to hold this trend line on the weekly. We got this coming down. It's already nearly a reset moment. I mean, last time, right, it got to this level, which it's almost there. It was 250 day and then rallied up to almost 5. So Fubo, long-term, bullish, just fighting a little bit. But I think this is like January right here. This came January 6th. Boom. Could the same thing happen? It's looking like it based on the timing of momentum shifting, yes. Okay. Fubo is fighting. That is for sure. Fubo. I mean, it's held very strong for the past couple days. Like, I don't know. Let me zoom in here. I mean, almost touched there. So 1, 2, 3, 4. Got a little under, but recovered 5, 6, 7 days. So you got about a week getting pretty close to that 285 range. Yep, 285, and holding it. So I feel good about that trend. Yeah. And then what's the downside to getting in right now? The downside is 255 or 250. So I don't think it's a huge downside risk. If I zoom out here, you're good. I already bought. I went early. I got the MACD here. I got this was curling. And this is just in a moment, a couple days, you're going to have this, Okay, but we're on a trend line, so I was willing to take that little buy opportunity. Okay, so but you can wait for confirmation. But as you guys know, Disney and Fubo partner. They're going to be now the 6th largest streaming platform. So what's next year look like? Amazing. And I told Bain Capital about this also, is that think about what COVID was like, and when people can't go do things, they lean into streaming services, because I can pay a streaming service $30 a month, and that's 30 days for the month of entertainment, right? So $1 a day. Where during times of recession, you can't go spend money bowling, right? Because going bowling can cost $100 to take a family out, and that's one night. So that's why I'm okay getting into a streaming service during a recession with Disney's money now backing it, right? They merged, so now they have tons of cash. They have tons of the weather any storm. They're not some small cap essentially company anymore. They have that money backing them during those hard times. So I have no problem getting into this. Let's see. I really like Archer to just get out of this. Archer, super cool company, super long term. I wish management would be a little bit more vocal about the positive things they're doing. They post a few things about their plane, but not a lot about the money and bringing more business in. But they post a lot about the plane, and the thing is really cool. Oh yeah, NVO. Let's get on that one. All right, we're in this downtrend. Okay, overall downtrend, but we are breaking out of that downtrend. Okay, so we got the buys, right? But again, we broke out. Here's the positive trend. Boom, boom, boom. Yep, not looking at it yet because we're here. And then now, right, you got a breakthrough, but obviously this breakthrough, it hasn't reset. So this is the first reset after that breakthrough, which we're currently at this 46 range, 48, anywhere right here. This is easily $100-$150 stock. Time frame, another year probably, but another year for a nice like 200% return. No one's complaining. You can do cash secured puts if you have the capital on cash secured puts for this. Bain Capital did a $45 cash secured put for December. Then because the stock was still there and it looked like it was going to still continue to consolidate, actually pushed that out to January now, just collecting more premium for his capital sitting there, and has made great returns. I think the downside is very minimal. If you take a look, tons of consolidation right here in this 40-50 range. That this is what might happen again. We're going to consolidate here a little bit, and we're going to make another U. We're going to just go whoop, boom, right back up to 150. Okay, so NVO, cash secured put, buy some, whatever one you want to do. It's still in that range. I honestly just believe if you put it into like a retirement account or something like that, you'll be fine just letting it sit there and you'll get a nice double up. Healthcare is just super undervalued compared to most things in the market. And they've just had a bad year, and that's fine. We're going to go ahead and take advantage of it because you want to buy the things. You want to take your wins that you're taking on AI and bullishness and all that kind of stuff, and then start trickling some of that into the things that had a bad year this year, because those things that had bad years this year are most likely going to be the ones that have the good years in the future. Yeah. NVO, I mean, honestly, you might be able to just continuously roll that if it keeps staying in these 40s the whole time for months and just collect one big premium check on cash secured put. PGY, if you guys don't know, big bank tech company, lots of trend lines. The straight ones, obviously, where the buy alert came in. But here you go. We had this small downtrend. We broke out. So there's our nice bottom. We started going up. So there's our positive downtrend. Once we broke down below the positive downtrend, we waited. We found support. Once we found support, we were able to break through the downtrend from point to point and break through. So now we got a nice reset after that breakthrough happened. We got a nice bullishness here. So here's your buy alert. And we actually waited till the downtrend was still there, or broke out of the downtrend. And we got the same level that the confirmation came in on. So I was good taking a position. But I did wait. Buy alert came in here. Wait till the downtrend broke. Okay. But it's kind of a sympathy play to SoFi, is why I'm in it. So SoFi is not truly a buy, right? Like, it's still hanging in these high 20s, and that's not a buying opportunity. SoFi, for me, a buying opportunity right now would be $20, maybe 21, and then anything under 20 is a buying opportunity. That's just not the case right now. So for us to have this tech company that is SoFi tech platform, loan platform, they make money when SoFi makes money, and SoFi's been killing it. They're not the only bank that uses PGY, but that's the main trending bank. So when good news for SoFi's numbers come out, PGY does benefit. And we had a beautiful pullback into an add buy opportunity here near and below the golden Fibonacci after a big run up. So I'm in for the next one. All right. That's what I'm seeing on PGY. Any other stocks you guys want me to look at or anything like that? We're getting close to the 11 o'clock market. And like I said, everything's going to kind of be mixed until we get some Powell action. I will be on the road today, probably around noon 1. So I will be driving to Indiana while Powell is speaking. All my positions are long-term positions. I don't believe Powell says anything. As long as he cuts the rate, if he says no rate cut, then obviously things happen. If he says no rate cut also, I do think that he will be removed January 1. I do not think he will be in that chair. And I don't know if you guys did see, and Bain & Capital brought it to my attention, was, as you guys know, if you are into the market or into the news about the auto pen filing saying, we should be able to reverse anything that was done with an auto pen. You don't know if it was actually him, but so forth, so on, right? If that's true, Powell was hired using the auto pen. And therefore, Powell would be able to be removed at any point of Trump's wishes. But with that, a shock to the market saying that Powell is just going to be removed could throw a bearish sentiment short term. And then this is the big one, and I'm glad you guys are here for this, because I do think, and again, Bain & Capital and I have talk every day about this, is that he could cut interest rates to 1% like that. I do believe anyone who was hired for this role, and I don't know if he even announced it. I knew there was an announcement coming, but I didn't really see it on my X feed. But anyone that got hired for this role, in my personal opinion, already signed some document that said this day one of being hired, you are required to cut interest rates to 1%. Again, I don't think that's exactly what the document said or what the conversation exactly was said, but basically you're going to be a puppet to what I want, and what I want is a 1% interest rate so we can refinance all the debt, the $8 trillion or whatever the amount that we need to refinance in 2026. I want to be able to refinance all of our country's debt at a super low interest rate. I want anyone who is in a home that can't get out of their home, that had a low rate and now has outgrown that home, I want them to be able to get into a new home. People who haven't been able to buy a home because of the large interest rates can now buy homes and get the whole boom market happening again. That boom market will take us through 2026. Now, after that, the American people are not that great with finances. And what will most likely happen is the same situation we're in now, where people were over leveraged in debt and everything. Instead of saying, oh, because I saved, or my interest rate dropped, I now save $800 a month, what the American people tend to do is say, oh, cool, I saved $800 a month. What can I go buy now? And they're going to go use that $800 instead of bettering their situation for the future, ahead. And they've been struggling this whole time. They have $800 extra. They don't think, oh, now I can, afford to live. No, they think, what else can I get? Because we live in a consumer's market. Okay. So that's our thought process of how this is going to go. So I do think he'll cut rates. I think that the quarter point's going to happen. So overall, market bullish. I do not think that we turn bear market as he rate cuts. I don't know if you also saw the stat, but 17 times or 19 times. Let me pull it up, actually. Let me pull it up on X. It was on my messages. SoFi with a new credit card, smart card. Here you go. This is the X post. Let me click on it. When the Fed cut interest rates within 2% of the stock market all-time high, the S&P has gone on to finish higher over the next 12 months, 20 out of 20 times. I don't know if you guys knew that, but that tells me I'm going to go with the 100% win rate, and I'm going to go ahead and say we are good for the next year if we get a rate cut today. We are bullish for this year, or 2026. Overall, we will be bullish going into 2027. Based on what I just said, with interest rates getting cut, everyone going ahead, dive in, refinance, buy more debt, whatever it may be, instead of just bettering your finances. 2027 could be the great downfall, because we are just going to double down on the scenario we technically are in right now, and not because what the administration has done, but because of what the American people have done with the advantage that he gave us. We didn't do it right. We made the situation worse. And you can blame whoever, but I wouldn't blame the guy who cut interest rates to give you that opportunity. But 2027, I would say, would be the year to be more worried than 2026, especially if that plays out with the 1% interest rate cut. If this 100% hit rate stays 100%, some might say because it's 100% that means that the next one's going to be the bad one, right? But I'm going to go in the favor of the win rate instead of the bear. Everyone that's, I guess, been worried about a rate cut and being at all-time highs has turned bearish, has lost 100% of the time. Cover call filled. There we go. ASTS. Alrighty. So we got till January 16th on that 100. Any other questions for you guys that I can answer? There we go. Watch closely. Lucid. Another EV one. Sure enough, we're in a downtrend. Okay. I'm waiting for a break of this downtrend. Downtrend. EV companies. At some point, maybe. It's got a lot of Saudi money in this one, I believe. Saudi Arabia, I think, loves Lucid. It's one of their most popular EV companies. I don't know if that's changing, I think, now, because, right, Tesla's allowed to be there. But EV companies I stay away from. Home Depot. Yeah, it's trying to break. I got to adjust these. It must have taken out the reset and to the upside, so I do need to adjust these. But these are what's on my watch list. LifeMD. This is what they call a mini HIMSS. Okay? So this one is one that you might want to stay or put on your watch list. It's just another, essentially, HIMSS, but it's a very small version of HIMSS. But it can move, just like here. We somewhere in the 5s, right? And we got somewhere buy alert, somewhere here 4s. You got up to 7, got up to 7s, and then ran trim 14s. Mini HIM version. The volume's not as big. You can't do as big as cash secured puts or covered calls. But I know HIMs could be a lot of capital depending on account size. LifeMD would be a small one to watch for that is similar to HIMs. Alrighty, guys. If there's no other questions, I'm going to hop off and we will see what happens at 2. Hopefully we see a little bit of a flip. A lot of things have reset. A lot of things have more room to go after a big pullback. So overall, super bullish. I'm going to get off, guys. I'll talk to you guys. Any messages, go ahead and shoot them over in the chat, and I'll talk to you later. Thanks, guys.